Looking forward to the next session. If any of you have been here in the previous years, every year our great partners from Amadeus come and present some really insightful data looking at the current year, so the past year, let's say, in the region on consumer behavior, buying purchase behavior, and some trends from airline and hotel demand trends. So we will be looking at each and every single key country from the region with the data, and as a bonus, we'll also be looking forward a little bit of data for Q1 of next year. So without further ado, I'd like to invite to the stage Joy Roche, heading up services for Middle East and Africa from Amadeus. Joy, please, welcome to the stage.
Thank you for having me on this graveyard shift, and I hope that I am able to keep you awake with some data. And data always presents some story that we haven't really thought before. So let's see what we are going to see today. So before diving into the specific market that Stephanie just said, we will look at how we are doing in the world compared to the region, and then we will look specifically into Dubai a little bit more than other markets, and then there are many markets. In the interest of time, I may not be able to cover all the markets, but you will get the deck as is customary with HSMAI Rock. And of course, there will be a summary slide, and I will tell you what we are doing with our own data. There is a good news and a bad news. The bad news is that global air traffic is still below 2019 levels. And I will show a lot of comparison with 2019, but as a company, we have decided that this is probably the last year that we will talk about 2019, because well and truly, we have surpassed 2019 levels, at least in this region. Hotel occupancy in November, as we stand, because we took this data about 3 days back, is still lower than 2019 levels. But that's really not a surprise. There is a lot that is going on. But the good news is that in Middle East especially, and I'll show you a slide on that, I think this is probably the only market where the occupancies have crossed 2019 levels. So this is airline, as I said, that the percentages that you see is a comparison to 2019 levels. And there is still some way to go. But I think the brief that was given by Mona before she asked me to do this presentation, that do only airline data. And I said that, well, how can we present airline data, because we only serve hotels and we love hotels. Of course, there will be hotel data. But you will see as we go along what is the story that is emerging. So this is at a global level. And if you see, I'm not sure if you can follow, there's a light blue line. That light blue line is 2019 level. And if you see Middle East, that's the only region that has breached that 2019 level. Everywhere else, it is below that light blue line in all other major markets that we have captured here. So let's go and see some stats on airlines and where we stand. And the reason that we are showing, because starting this year, we have started delivering airline data to all our business intelligence reports that hotels have been using for years. And what kind of data do we present? We have air search data, which is about 200 million passengers who are searching airlines from point A to point B. There are about 20,000 travel agents who are being covered, and of course the top 10 OTAs. There is air booking data from the three major GDSs which we are covering. There is air traffic forecast, and air schedule data. And you will see that airline seats or capacity as a leading indicator is such a vital component of doing your marketing strategy or revenue strategy, because airlines know or schedule their plan way before hotels actually do the demand coming in. So if you follow that leading indicator, that's probably going to simulate what kind of demand you are going to see in your specific micro markets. Before we dive in, this is a very interesting slide that I was looking at myself, that these are the top 10 markets into Dubai for 2023. And they are divided on the left as into air traffic, and on the right to hotel traffic. Now, if I'm a marketer, I will look at intersecting points where it makes maximum sense for me to spend my marketing dollars. Or is my hotel imitating what I am seeing into the market? Because the market may be a misnomer in many scenarios, and we will see as we go along. Now, this is a comparison of how Dubai is doing with search volume compared to 2019 level. And the good news is that it is way past 2019 levels, but I invite your attention to the last gray line, which is Jan, Feb, March, or first quarter of next year. And if you look at the actualized numbers of 2022 and 2023, it's almost at a 50% level, at least in January. And we are not very far off, and air traffic, the air seats, will actually get sold pretty close to the date. So that's a very positive story emerging out from there. And what I said in the last slide is actually getting converted here. This is actually air seat volumes compared to 2019 levels. And you can see that the blue line is 2022, the orange line is 2023, and what you see in the first 3 months on the top line, which is 2024, is already surpassing 2023. So if you are running a hotel in Dubai, it's great news for you, because you know that the demand is well and truly beyond what you did in the last 2 years. So how are you going to strategize for your rate and for your distribution? And we will come to that a little bit to see how market segmentation and how channel segmentation varies in the market. This is inbound passenger volumes to Dubai compared to 2019. And again, this is also a very good news that it is simulating what you saw into the last 2 slides. Now, this is airline capacity all the way from Jan of 23 to all the way to March of 2024. And you can see how airlines are adding capacity coming into Dubai. So this is a very good news if you didn't know already. So if airline is adding capacity, that means that they know that there is enough demand which is going to be filled up. And I'm sure all of you are traveling. Any flight into Dubai, any airline is always packed. So this is a testament to the fact that demand's coming back with a velocity that you probably didn't anticipate. Now, this is Dubai hotel and group pace. On the top left, what you see is comparison between 2019, 22, and 23, and that is historical data. And the blue line is 23. It is well above 2022 and 2029, but the graph below on the bottom right is just a group pace. And it is important to show that because group comes at a much larger lead time, a much longer lead time than your transient business. And it is for you to judge how are you adding base compared to 2019 or compared to 2022. And if you see that the blue line, Jan is a little bit soft in Dubai with all the holidays, people coming back to work. But come February, it is way above 2019 and 2022. So now it's for you to go back and check whether your hotel is imitating this graph or not. And if not, what kind of strategies to put in to get that group business. Yesterday, I was in Omar's session in the plenary in the first half, and he actually presented this kind of pie chart and said that if we change this market segmentations, what kind of flow-through profit goes to the bottom line. And that's an asset manager's point of view. So this is Jan to December of 2022. Actually, if you see, nothing much has changed between 2022 and 2023. There is a marginal variation of all the segments. The story that is emerging from here, that there is a segment called Other. If you look at it, that has gone up by 5 percentage points. And what is this Others? It is air crew who is staying in the hotels and residents who is staying in the hotels and any other uncategorized business. So if you are tracking that against your comp set, maybe that's an indicator of what has happened in 2022 and 2023. But if we go and look at this into the future, just comparing first quarter of 2023 with first quarter of 2024, you can see that the same trend is repeating. I will give you a couple of minutes to take a look. You don't need to take photographs because the decks will be coming to you, so you are good. And you can go back and analyze this at your own pace. Now, coming back to channels, this is something that intrigued me very, very much. Because with so much of air traffic, the GDS segment in Dubai is just 3 percentage points. If you compare this with any other market in Europe or North America, they're always in double digits. And I have Puneet here sitting and listening to this. He will probably agree with me that there is money on the table because GDS as a channel will always give you 25% more ADR. So again, this is market, and market may not mean anything for your hotel. But if the market's doing this, chances are very little that your hotel will be doing diametrically opposite what the market is doing. And so I would sincerely urge you to take a look at your GDS distribution, your GDS visibility, or whether you have opportunities to convert that into business, and so on and so forth. OTAs are killing it, as always. Brand.com is kind of constant. But let's look forward. How is this panning out? See, the GDS figure is just jumping out of the screen. This just doesn't make sense to me. With so much demand, this ought to be in double digits. So if there is any news, any story that I take out from this, guys, please focus on your GDS channel. Corporate business travel is not going to go away anytime soon. And as far as there is corporate travel, they will not book in any other channel other than the GDS, at least for the foreseeable future. There are changes happening in the GDS channel, but this is something that I think that is worth taking home. Moving on, this market is probably on steroids, F1 or not F1. Yeah, I mean, I have not seen any market in the first quarter of next year which is in excess of 200% compared to 2019. There are not very many markets, believe me. So if any of you are here from Abu Dhabi, just you know what to do with your pricing. I don't need to tell you. And whatever rate shopping report tells you, what your immediate comp set is doing, this is a good enough leading indicator to put confidence back that do not price yourselves low. There is enough and more demand. Same thing here. I think this is imitating the Dubai picture that you saw. The group pace is really robust. So I think one needs to enjoy the ride while it lasts. The market segmentation, nothing really has changed between 2022 and 2023, as far as I remember. It's pretty much the same, but the group business has significantly gone down between 22 and 23. And if we look forward between Jan to March of 2023 and Jan to March of 2024, as business on the books, comparison with same time, it's the same kind of market segmentation getting repeated. Again, this is probably a shade better than Dubai on GDS. It is largely a hotel direct business market, largely. So there is enough and more to spread the distribution mix on and spread the channel mix to make sure you're driving profitable business. OTA is, again, very strong, especially in this market. Brand.com, rather weak. And OTAs, as we all know, will pick up business in a very short lead time, unlike Brand.com. And that picture is pretty clear, that OTAs will put in money on the slot machine, in the search engines, when they see the demand in the last couple of days, and hoteliers have absolutely nothing to do rather than keep opening inventory. But with so much demand that you saw in the previous slide, I will leave the inference back to my hotelier friends. And it is the same kind of picture in 2023 versus 2024. OTAs maintaining their share. In a long lead time, Brand.com is doing rather well. But again, GDS just out of picture. That's something which I think needs focus. Let's look at a troubled market. Tarandeep told me over lunch that there are some troubled markets, and let's look at one or two of those troubled markets. Airline capacity is pretty good in Doha, right? So if any of you are pricing, I think there is enough reason to believe that the first quarter will be better than first quarter of this year. But the troubled market scenario is pretty clear here. You see the group pace, it is growing down dramatically. It is completely different to the graphs that you saw for Dubai or Abu Dhabi. So if you are in sales, if you are in revenue, things need to be sold when there is when there is no latent demand in the market. But if you see the leading indicator, maybe there is some confidence that you will take home tonight that you need to think differently. Market segmentation, it has varied drastically between 2022 and 2023. You can see that negotiated has kind of retained its market share, whereas that other business has grown from 2% to 14%, which means that with groups shrinking by more than 50% in year on year, because we know what happened in 2022 and that cannot be repeated in 2023, the markets, the segments have kind of rebalanced themselves. And if you look at 2023 and 2024, it is a completely different picture. You can see that direct business has shrunk drastically. And I'm sure there is a lot of data, and the percentages are probably not clear. So I would really tell you that please take this home and look at it at your pace, and we are always there to come and engage with you. So I will go through quickly the other markets in the interest of time. There are all the major markets that we have covered, so you will get a copy of this presentation. In the last 30 seconds, the point that I will leave before you, that charity begins at home. So how do you use this data and make it actionable? To begin with, I will talk about our own company, and we have a digital marketing practice where we are putting our data into the marketing algorithms. And we also have a destinations business. Whether you talk about Dubai or Abu Dhabi or Saudi or Qatar or Egypt, all those destinations are marketed by us. So these destinations, when they market themselves, rely very heavily on this leading indicators and hotel data that they're seeing into the markets. So if the destinations are doing it before you do it, I think it's time to jump into the bandwagon, because as a company, we are putting all these airline data into the reports that you are subscribing, or if you're not subscribing, I invite you to at least engage with us and have a discussion and see how you can maximize your segments, channels, and ultimately your bottom line. Thank you very much.